Hey guys, Joseph James here, back again with your nightly newsletter brought to you by theschooloftrade.com. Today was November 9th, 2009. Had quite a good morning this morning in the room, even though we had a little bit of slow price action to get started. Before we talk about the trades we took today, guys, I want to remind you about our YouTube page. That's /School of Trade. And guys, if you're not using this YouTube page, you're really missing out on lots of free information about our methodology. When you're there, guys, please subscribe to the page to get all the new videos, and please rate and comment on this video. Now we took 24 ticks out of the market today, guys. 24 ticks, so 240 USD, and of course, it brings our week total. If you follow us down here, we've got just shy of 2,400 bucks there for the month of November there so far. So not a bad start to the month. Of course, did about 10 grand, just shy of 10K here in the month of October, averaging just below 430 bucks there per day right now on only 4 contracts. And as you guys know, we'll keep you guys posted as we make our way through the rest of the month of November. Term of the day today is market sentiment. Now, market sentiment is the overall opinion of the market by the mass majority of the participants in that specific market. So it's the overall opinion, what the mass majority of people think the market should be doing. That's called market sentiment. Well, you may hear me say things like the sentiment is bullish because we see more buyers than we do sellers, or sentiment is bearish because we see more sellers than we see buyers, right? You're going to watch price action, candlestick patterns, your momentum indicator, and most importantly, look for how price reacts to the changes they make. So we're looking for, of course, market sentiment here. So market sentiment will be defined by whether or not price rises when, say, momentum is rising, right? We look for changes between if price action is rising and, say, the speed of the tape is rising. That, of course, will identify market sentiment. Now, here's what to look for. When it comes to price action, I'm going to watch my time and sales window. One of the key components to identifying market sentiment is going to be price action, the time and sales window. How does price react around these levels of support and resistance? This will tell us a story of who's trading around these levels, and it'll give us an idea of whether or not we should be getting long or getting short around these important levels of support and resistance. Are the moves seeing follow through, upside or downside? Now, follow through is something that confirms the actual direction or confirms the actual sentiment in the market. So we look for that follow through throughout the entire process. We also use the pace of the tape indicator. Now, in my opinion, this is the best way to identify short-term sentiment, is the pace of the tape. Momentum indicators are also very widely used, of course. Technical indicators such as momentum, RSIs, and stochastics. And you're looking to see if momentum moves with price. Do we see any divergence? Right? We talked about that earlier. We look to see how price action relates to these indicators. So is momentum rising and price action falling? That gives us an idea of overall sentiment. We also use market profile, or the value area bracket. Specifically, we're looking at the location of price relative to the value area bracket from yesterday. It gives us a directional bias generated by those value areas. So 3 main components there for what to watch for when it comes to divergence. Now, like I said before, in my opinion, the best sentiment tool here is going to be that pace of a tape indicator. I'm a strong believer that because there's a time variable involved, right? Example like revolutions per minute. Well, we put the pace of the tape indicator on a time chart. So there's a time variable, much like your revolutions per minute, right? Your RPMs for the engine of your car. It's a very precise, fast time frame, which allows us to see the move kind of within the move. So we get a chance to read the emotions of the market inside the moves to be able to, of course, look for volume or momentum to dry up or to increase to help us, of course, identify a trade we want to take. It helps because it allows us to react just as quickly as the market does. So rather than waiting for momentum indicator to swing up, which may take, a fraction of a second or may take a couple seconds to react to it, we can be very precise by using our pace of the tape indicator to look for changes in sentiment in real time as they're developing, and then of course make educated decisions accordingly. Now, as always, guys, we're going to show you how to use these tools to identify market sentiment every day in our live trade rooms. Come out and join us, guys. Tomorrow morning, Tuesday, we open up at 7:45 Eastern Time. Tomorrow also we'll have a free webinar at 11:30 Eastern Time. And want to remind you guys to grab a copy of the beginner's course before you come and join us. Now, on Wednesday, guys, we have Veterans Day here in the U.S. Most of the markets will be very, very quiet on Wednesday. We're going to do a webinar, guys, at 9:30 Eastern Time on Wednesday. So don't miss a free webinar, 9:30 a.m. Wednesday morning. And, of course, we'll be talking more about the topics of the webinar a little bit later on this week in the live trade room. Listen to some of the trades we actually took today, guys. Now, of course, here on Crude, we got our day off on a relatively rocky start here. Now, of course, our day started off on a good note first, just about 6 minutes past the hour here. You'll notice we have this level here, 83. Right, 83, of course, is our swing high here. we break above the red line, right? This is a major level of support or resistance. In this case, it's a level of resistance. 83, of course, is our swing high. This is automatically located for me in the market. Of course, once we break above that swing high, that's going to be our entry for our breaker pattern there to the long side. Enter there at 78.86. Now this was kind of an unfortunate move here. We only got filled on 2 of my contracts because we usually try to take a 4-contract trade. Kind of jumped my order a little bit there. Didn't get much of a fill. Only got half my order filled there and took the first target, but of course that flattened me out there for 8 ticks there on the first winner. Now, of course, we move over, guys. The next trade here was unfortunately a loss. We haven't taken a full stop here in quite a while, but we did right here. Now, the reason why I had to stay in this one was because we had what? We had green pace of a tape, right? As you guys know, we'll exit early when we see 3 things: momentum, red pace of a tape, and MACD. That will get me out of a trade early. We didn't see all 3 of those lining up today, which meant when I got in there short here below 87, now, of course, again, had that swing low. This is a breaker short, so we're looking for, right, this to continue down after we broke out of this consolidation here. So we had nice consolidation up top. We were looking for this thing to kind of break out of this thing, but of course, never happened. The green pace tape kept me in for a full stop. Of course, we lost 16 ticks there on that full stop loss. Let's keep moving, though. We weren't done yet. We made that money back here not too late, not too much longer in the market. Over in the gold market there, I trade GC, so of course this is NYMEX gold. And this is another example of a breaker short pattern here. Of course, short-term trend here, guys, right? Short-term trend here was down. And of course, with that short-term trend, we're looking to continue that trend here. Swing low was at 6 even, so the 1106 even, right? Tried to, of course, continue with that trend to the downside. But when we got into trade, price action slowed down. We saw momentum curl against me, red pace of the tape. And of course, we exited early for that scratch trade. Now, if you guys are with us watching this thing develop, you heard me say exactly as it was developing, okay, we've got momentum curling against us. We've got red pace of the tape. All we needed now was to really start seeing this thing deteriorate to the downside, and it gave us an early exit early there for a scratch. Now, luckily, this thing was in the green. All I had to do was move my stop down to my point of entry, and of course, that was enough to get me out of that trade unscarred. Now, we made all the money back. You guys started padding our account a little bit after 10 o'clock, 10:12 here on the pound. This was another example, guys, another trend continuation pattern. This one called the breaker short, right? Another breaker pattern here, guys. So we had some consolidation up top, right, above the 70 even level here in the pound. Now, pound, guys, $6.50 per tick. So we trade a little bit larger size on that. This, of course, broke below the 65, that swing low. Once we saw below that swing low, that's when, of course, we got our entry there, 62, right? 67, 62 was the fill. We took 4, 8, and then trailed and stopped. There are 5 ticks there, guys, so locking a total of 42 ticks on that winner. That, of course, got us back in the green for the morning, and then we'll keep moving here, guys. Keep moving. Next trade here was on Crude. Final trade of the morning. Another 8 ticks, of course. Small winners across the board. We saw some relatively decent price action, but really didn't get much as far as any follow-through going on here. Another breaker long, so a lot of trading with the trend here. Had the swing higher 46. As you can see, guys, the trend was really moving, right? Strong move here. Of course, grabbed it. That little bit of a pullback, though, is the only reason why it didn't give us into this big move here. Grabbed 8 ticks, though. Fill was at 79.50. Once we broke above the 46 level, took 8 ticks out of it, another $80, and of course, tally them all up, guys. And that's how we got our $240 after we took a full stop here in the market this morning. So a great example of how we were able to work our way through the day after taking that full stop. And of course, we simply follow our rules every morning. And as always, we'll go over those rules in real time tomorrow with you guys, 7:45 a.m. Eastern Time. Tomorrow's a Tuesday, so a free webinar at 11:30 Eastern Time. We'll give you a free 3 weeks as part of our trial. Grab a copy of the beginner's course on the way in the room tomorrow. Please rate and comment on this video. Drop us an email for lifetime membership, sales@schooltrade.com. My name is Joseph James. Guys, look forward to seeing you tomorrow morning, 7:45 a.m. Don't miss a tick. Bye-bye for now.